Morning, everyone. It's Grow with Joe here to give you more lessons on how to improve your life financially and personally. Today, what we're going to talk about is a financial planning topic, and is what is the best strategies for long-term investors are. And when it comes to investing in the market, things can be counterintuitive, where you think something is the right thing, but actually there's a better strategy to help you out. Um, but yeah, I've been doing the financial planning for 5.5 years now. Time goes by really fast, so definitely learning a lot of different things about financial planning. I'm an MBA program right now at Syracuse University, doing that online. Uh, yeah, learned a lot of stuff in my managerial finance class, my accounting class, and everything. And the key thing what I learned in just all those classes is you gotta know your numbers. A lot of people that I come across, they don't know their numbers. They don't understand what is going on, what are the alternatives, and everything. And numbers tell a story, and I like to interpret those numbers into a story and everything. But yeah, so today I'm just going to go over what is the best strategy for long-term investors, and that is something called dollar cost averaging. So I'm going to go share my screen real quick, and so here is a chart of showing two different stocks. We have stock A, which starts at $20 a share, and every year until year five, it goes down in value until it reaches $6 of value, $6, and then it slowly climbs back up. Then you have stock B, which starts at $20, and it's just continually going to get better and better over the next over the next 9 years. So if you are investing in these two stocks, stock A and stock B, $200 a month or $2,400 a year, which stock would perform the best over over that 9 year period? So let's just say in the first year, your average price to acquire a stock was $20 a share, and then for stock B, it's just going to continually going up in value. In year two, that's going to be $22, and then in year two, for stock A, that's going to be $16 of value and everything. But what I've seen from like most people think like, hey, I should constantly invest in stock B because it's constantly going up. But with dollar cost averaging, what happens is stock A is going to do a lot better. Now, these are just hypothetical numbers. These are just to show you, like, hey, if I stick with this long enough strategy, then things can work out. So as you can see, with stock A is going down $16 value, 12, 8, 4, 8. If this is the case, as you can see in year five with stock A, 600 you can buy 600 shares with your $2,400 a month. But with stock B, when the price is $28, you can only buy 85 shares. So at the end of 9 years, stock A you have accumulated 2,140 shares, and with stock B only 799 shares, roughly. And as you can see, the value of all your shares with stock A is going to be 42,000. With stock B, it's 28,000. And so as you can see, like if you were to like sell out at year five and the market goes back up, then it's you sold out too soon. So the average back in the day before like trading was very routine and in the internet, people would hold on to stocks or funds or mutual funds or ETFs are pretty new, but back in the day, people would hold on to funds for 6 to 8 years. But now it's like 8 months and everything. And so the key thing is, like, if you're a long-term investor, dollar cost averaging is a great strategy to use. If you're already doing a 401k, you're already doing dollar cost averaging every time money gets taken out of your paycheck to um, to help participate in dollar cost averaging. Like last week, the market was down. People were thinking markets are overvalued and everything, just because the Federal Reserve is increasing they're printing out more money and everything. So that money's going to some of that money's going to the stock market and goes to other places. But and this week the market or yesterday the market was down. And so if you're doing dollar cost averaging, hey, like if you're a short-term investor, investing right now is not a really good time. But if you're a long-term investor, hey, like in 40, 30 years from now, that might be a good time to invest. And like when it comes to investing in the long term, you really don't know what is going to be the best strategy to use. Uh, And so, like I showed this chart to people, it's called a Callan chart. This one's done by MFS. It's not a recommendation for them, but they just have a really good chart. But it just shows you how different asset classes perform over a 20-year period. So as you can see, in 1999, the best performing asset class was large cap stocks. And in 2008, when the Great Recession happened, global bonds were the best performing stock. But like if you're in 2008, large cap growth, it had negative 38% for a return for the Great Recession. But if you would have just like, hey, I'm going to get out, well, the next year, large cap went up 37%. So you really don't know, like year to year, what is the best performing asset class. And there's only three things you can really control with investing. You can't control your rate of return, but you can control how much you invest and how long you stay invested for. So you really just need to know what your strategy is and what are your financial goals. If you're investing in your 401k, this is probably like a long-term strategy and is really just going to help you. Dollar cost averaging helps you get a better return. People who do dollar cost averaging, just like what you do within your portfolio, tend to get a 1.1% higher return than someone who doesn't do dollar cost averaging, just because you're taking advantage of buying stocks and mutual funds and ETFs when they're on sale. And that is just basically how dollar cost averaging works. So like I heard an example is like when you have to eat, right? So you go to the grocery store and you go to the grocery store, there's a big banner on the grocery store that says, hey, everything is 50% more expensive for groceries this month. And you're still got to eat, so you're just probably going to buy less groceries than you normally would. But let's say you go to the grocery store the next month and there's a big banner that says 50% off on everything. And if you have your dollars are going to go farther, so you're probably going to stock up. So because you want to take advantage of the deal. So if you're a long-term investor, 30, like we're talking about 20, 30, 40 years, just think of, hey, this is the best strategy to use and everything to help me reach my financial goals is dollar cost averaging. Because it incorporates two things that you can control: how much money you put away and the time you stay invested. And financial planning is like planting a tree. The best time to plant a tree was 20 years ago, but the next best time is today. And I feel like the greatest thing to help folks reach financial independence and everything is just having a plan and having goals. It's crazy that I talk to people and they're like, and I say, hey, when do you want to retire and how much money do you want to have in retirement? And they really don't have an answer. They're just, it's not a good strategy. Hope is not a good strategy. You want to be intentional. And this is what I hope people do is create financial plans, give them clarity on their goals and what they should work on and everything, and then just give them the strategy and just coach them to help them get to their goals and then give them that accountability that they need. So that's everything I do as a financial planner. Just tell you strategies When it comes to the nitty gritty, I can't really give financial advice over this. Uh, Give recommendation. I can't give broad recommendations. A broad recommendation is a life cycle fund. But if you're looking to get a different type of return or looking, there's different options, and we can do portfolio reviews to see like, hey, hey, is this like the best option for you in your situation, and just give you comparisons like, hey, if you do this, this is the outcome, potential outcome. Hey, if you do this, this is another potential outcome. And yeah, to do that, you just to schedule a discovery call with myself, you just go to www.growwithjoe.me/start here. And that can give you all the information you need to help you get started, and just schedule a complimentary discovery call and everything. I got an error right here. I'm using StreamYard to stream on Facebook Live and YouTube Live. But the URL is growwithjoe.me/start here. See if that goes through, if I'm getting another error again. But yeah, but the key thing is if you have a company plan or you're already contributing to a Roth IRA on a monthly basis, you're already doing dollar cost averaging. So just keep it up. Right now, there's a lot of uncertainty with COVID and the elections and everything. But if you need this money within the next 6 months, there's a lot of uncertainty. But if this money is for 30, 40 years from now, hey, just continue staying in the market and everything. Like if you invest in the S&P 500, like for that to go to zero, you're expecting all 500 companies in the United States that are the largest to go out of business, and the likelihood of that happening is pretty low. So key thing is stay invested, put money away, pay yourself first, and that could really set you up for success. But there's other strategies we could talk about, like there's taxable accounts that I feel like is a really good strategy. Tax planning is something that also affects a lot of people. I do projections on that. But if you have any questions, just put in the chat and everything about investing or any other financial planning questions, budgeting. But yeah, the key thing is just take action. The distance between someone's dreams and someone's reality is the action that they take. So just be intentional, just set time to help you. Like if you get paid every 2 weeks, to say, hey, I'm going to spend 30 minutes just seeing where do I want my money to go. Okay, I'm going to put 5% into my 401k because I'm going to get a match there. And then I'm going to open up a taxable account, put money there. Hey, if I'm like, one of my goals is real estate, like, hey, this is what I need to put away. And yeah, just putting everything together to see, putting all the puzzle pieces together to see what needs to happen to help you live your best life, give you control over your life. And that's what a plan does, and take an action on a plan. It gives you control over your life. Like if you consistently put away $500 for the next 35 years, you will have $1 million at a 7% return. And having $1 million at retirement will give you a lot more control over your life than having less than that amount, say 100,000, 250,000. And that's what life is about, is having control over your life and flexibility to do what you want to do. So you take advantage of life and life doesn't take advantage of you. And yeah, that's just what I'm about, is I'm trying to help people take control of their life so they're less miserable and live life as they wish to live life. And yeah, like it's not a good life to be miserable. Suffering is needless, but pain instructs. It can be painful to do your budgeting, to do all these things, to work with somebody, but it gives you an opportunity to grow as a person. Suffering is having that mental stress, being like, hey, I don't know what to do, I don't know what's possible, and everything. I don't like my situation. That's needless. There's a way to overcome that and just live your best life. And one of my favorite sayings is life is long as you know how to use it. So hope you learned a lot today and learned about dollar cost averaging is the best strategy for long-term investors and everything. And if you want a discovery call, just go to growwithjoe.me/start here and we can get started. And as always, what I like to say is if you go with Joe, you can grow with Joe because Joe knows dough. All right, enjoy the rest of your day and start taking some action. All right. See you tomorrow at 9 a.m.